Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capron. Today we're going to take a look at one of the worst sectors in the market and see if this turkey can fly. Here it is. We have the retail sector here, which has been underperforming all year. I'm going to stretch this out. You can see that it's been able to do absolutely nothing. The whole year just moving down and down and down and moving to the downside, and we had a first attempt to make a low right here. And this is a pattern that often happens during a bottoming process. That is one in which it's making lower highs and lower lows, and then makes this substantial move, clearing the old high and breaking the downtrend. And it looks like it can go. In the past, it always looks like it can go when you see this pattern. The oil stocks did that as well. If you look at XLE, this is XRT, and then they come all the way back to retest, and then they get going again. And whether it's a market ETF or stocks, most of them produce these kind of patterns. And that's what we do at Master Trader. We use patterns, historical patterns that have worked for decades and decades, and they do change a little bit over those decades, a little bit. And as market environments change, we got high frequency trading now, and the internet moves information quickly, so the patterns do change a bit. Anyway, what we have going on here is the fact that yes, it cleared that high, which breaks the downtrend. That's why you don't need trend lines, folks. Take the diagonal lines off. Just look to the left. Is it making lower highs and lower lows? Does it meet that definition? It's still in a downtrend. Did it take out the prior swing high prior to the lower low? It's no longer in a downtrend. It's in a sideways trend. Very simple. All those guys you see drawing lines on CNBC and analysts and others on the internet drawing lines like that, they just haven't learned how to do it the right way. Anyway, so here we have this bottoming type of process, and on Friday, this sector came to life with many of the retailers within it reporting earnings that were expected to be just awful, and they showed they're actually doing okay compared to what's been terrible. So some life there, and a lot of them have begun to turn around, and they could be the kind of plays into the end of the year. As this begins to turn, I call this a trash can stock, and a lot of times these are the ones that bring up at the end of the year as the tax loss selling is over. That being said, there are others like Target, which had a great day, and compared to the past, and Foot Locker had a great day. So some of these retailers that have been really beaten down terribly. Look at this. This is around $80 down to $30. Big move to the downside. So we'll see if these retailers are going to get going here in the latter part of the year. And looking at the markets here, we had a discussion about bottoming tails last week, and at the beginning of today, it looks like we're trying to get another, and the markets are consolidating here above this major support. These are the S&P futures, so this is what's happening right now. And you can see the move from the lows that started last night as prices come up into this resistance area. So with the markets being up, one of the things you always should do, whether you're trading these futures or whether you're trading an individual stock, when the stocks that are gapping up, you should see where are they gapping up to. Now, this is pretty obvious that there's a resistance area here, but sometimes it's not so obvious. So you look at your intraday chart and see where the resistance is, and you can see there's quite a large amount of it up here. So while it looks like the S&Ps can go a bit higher here at the open before it hits this area where the sellers are going to show up, not going to be a good time or good place to get active unless you're really fast there in the morning. So we put together multiple time frames here at Master Trader: support, resistance, relative strength, relative weakness, and other technical concepts to put the odds in our favor. Let's look at the NASDAQ. Similar type of pattern. Now, I want to show you something interesting here, because markets don't always all move together. And the Dow here has been lagging a bit. And See the reversal that it had here on Friday. So when you look at the futures market, you are looking at a 24-hour market. It does close down for a short amount of time, and the volume does dry up in a big way overnight. However, it gives you a different picture than when you look at the electronically traded fund or the cash market, because you don't see that many gaps. You'll see gaps on a Monday morning, possibly, if it's significant. But look at the diamonds, which is the ETF for the Dow, where you see the opening prices and the gaps. And what I went over with subscribers here was the fact that the Dow here has this little topping type of a pattern, and it had gapped up, and then it gapped down, which is called a bearish island reversal. But the other part of these type of bearish island reversals is they're most potent when they are in a downtrend, and this is still in an uptrend. It's been moving sideways, but these bearish island reversals are most powerful when they're in a downtrend when that happens. So this could be just a lot of noise that's going on, and well, they're at 233.60 here, so not a big deal. They really have to get back up into this red bar. So a little bit of choppy action probably going to continue to go on here in front of the holiday. We'll talk again before the holiday, but that being said, it's early on, but I do wish you all a great holiday, Thanksgiving, with your family and friends, and we wish you the best here at Master Trader.